Welcome everybody back after the Christmas break here to Junior Resource Investing. I'm going to start out as always with my disclaimer. Please remember this is not financial advice, right? I'm not your financial advisor. My guests are not your financial advisors. This podcast is for entertainment and educational purposes only. For the full written disclaimer, please check the YouTube notes below. Otherwise, though, I'm pleased to present our latest guest, Marshall Koval, who is the CEO of Luminex Resources. Luminex is a gold and precious metals developer operating just a few kilometers south of the famous Fruta del Norte mine in Ecuador. It has a multi-million ounce deposit already with lots of prospectivity remaining. It trades on the TSXV under the ticker LR and on OTCQX under LUMIF. And Marshall is joined here today with head of IR, Scott Hicks from Luminex. Guys, Scott, Marshall, it's nice to see you today. How are you?
Yeah, great to see you, Matthew. Actually, Scott's our VP of Corporate Development besides IR and everything else in communications.
Wears a couple hats, eh? Yeah, pardon. So I'll start out the way we always do. Scott, I'll send this one your way. Why don't you start out 30-second elevator pitch on Luminex? Why is it compelling and why should investors care about your story?
Yeah, sure. Thanks for that. So this is where we had all the projects in Ecuador when we completed a spin out from Lumina Gold in 2018. And it's a large land package, over 100,000 hectares. We have a base asset, Condor, which has a 6.5 million ounce gold resource. We did a PEA on 3 million ounces of that in an area called Condor North. We're drilling right there right now. We're having great success on a new underground area called Cuyas West. So we're hoping to expand the underground resource and rescope the PEA to a lower capital, higher grade project than what we put up in 2021, which was a good project at the $1,600 gold level we looked at that time. And then we also have partnerships with Anglo American, who's going to be drilling a copper porphyry here shortly, and Jogmec, who's a Japanese group drilling on another copper property we have. So it's a large land package, lots of prospectivity, with an existing resource base in a country that's been underexplored over the years.
Mm-hmm. And you're right, you do have a number of different land packages. The focus of this conversation will be on Condor. Obviously, that's your flagship. You kind of mentioned it. I'm just always curious to try to get to the origins of things. Could you just discuss the spinoff from Lumina? It was August of 2018, so it's been a few years. You're your own thing now, but what was the genesis of the spinoff? When did you realize that this was going to be a necessity? And maybe you just kind of talk us through that.
I'll go ahead and take that one, Scott. Basically, we had all our assets in Lumina Gold at the time, our entire portfolio in Ecuador. And basically, the Cangrejos project in Lumina Gold, which is the only asset today, was being advanced. Right now, we're in a pre-feasibility study mode. So in 2018, the idea was to take all these lesser developed assets that need more exploration. Some of that was grassroots. Some, like Condor, was to expand the known resource there and do a PEA. So everything other than the Cangrejos project ended up in Luminex. And that gave us the ability, to transact Lumina Gold if necessary, or any one of these other properties that we have within Luminex today. So, for instance, if Anglo American hits, that's set up in a structure that we can move it out, do anything we want financial engineering wise with it. So that was kind of the gist of why we went and spun all these other properties out.
Perfect. So the question I always have, and I think it's valid. Obviously, this is a bit different when it's a spin out because you already so intimately know both your projects because they were previously under one roof. But the question I always have for executives is that, do you ever struggle to find a balance when you're CEO of two different companies? If I'm not wrong, Marshall, you're CEO of Lumina as well, right? So,
yes.
It's a little bit different with a spin-off because, this was previously one organization, intimately. But yeah, is there ever a struggle to find a balance between the two? Do you ever find, because Lumina is a larger company, and it's 10 million ounces of gold, if I'm not incorrect, that maybe times comes to dominate your time more than maybe the little sister Luminex does?
So Lumina's got about 17 million ounces of gold right now and about 2.2 million pounds of copper. But it's a mirrored management team. We've taken the management team and we're able to work across it. There's only a few exceptions. We talk regularly. Sometimes Luminex gets more of my attention. Sometimes Cangrejos and Lumina Gold does. But we try to balance it. And I think, if you look back at the whole Lumina Group's history back to 2004, when I joined Ross Beaty and Lumina Copper days, we had multiple companies. So, we've worked in this environment with a lot of the same management team, all that time period.
Mm-hmm. And I'm going to talk about the team here in a moment, but I just wanted to ask you, Marshall, do you mind just running through your career in terms of just M&A specifically, perhaps?
Yeah, so let me kind of go back. I started in industry. I'm a geologist by training, and I started working for major mining companies in copper and gold exploration for the early part of my career. And then I moved into kind of the consulting engineering side, geotechnical engineering, that sort of stuff with Golder Associates. Then I was president with Pincock Allen and Holt. And as far as M&A goes, I put together a deal where Hart Krauser, a consulting company, acquired Pincock Allen and Holt, and I ran that. And Pincock Allen and Holt did, probably at the time I was there from 93 to 2002, we did about 65, 70% of our work for banks on non-recourse project finance, M&A, and we were the independent engineer on it. So I did quite a few projects in that time frame where I was directly involved in these projects. And then in 2004, I joined Ross. In the M&A, we had Lumina Copper, basically had 10 copper projects in mining-friendly jurisdictions, Canada, Peru, Argentina, and Chile at the time. And it was a real option play initially, getting all these copper plays together. And, once you control a property, you have to do work, so you have to add value. And we did that, and we did a whole series of spin-outs. Everything, and it's kind of a similar story to the Lumina Gold spin-out with Luminex. We had everything in Lumina Copper, and we did our first deal on what's the Caserones mine today, where we sold that to Pan Pacific, a Japanese mining company. And then we spun all the other assets out into Northern Peru Copper and two other companies. And I came in as CEO of Northern Peru Copper. We advanced Northern Peru Copper to a pre-feasibility study, and then that was acquired by Jiangxi Copper and Chinamin Metals. And then subsequently, we went on to Taka Taka, and that was acquired by First Quantum. And these were big acquisitions, sort of a $500 million U.S. acquisitions. So that was kind of the whole history of the group. And then we had our own private equity for company that we put together with our own money. And we got into Ventana Gold very early, and we were involved in advancing a lot of the technical work with Ventana Gold, and that was taken out by Ike Batista. So we did quite well on that. And then we had, through the fund that we acquired Anfield Gold, or Anfield Nickel, and then it morphed into Anfield Gold. Anfield Nickel, we sold that asset to Cunico. Anfield Gold, we sold that to Sarabi. And then that was how we entered Ecuador after that with a new venture in Lumina Gold. And we came into the Cangrejos project, with the financing. So we financed our way into it, put a management team in, and then ultimately acquired all the assets that we have in Ecuador. So long history personally and group-wise with M&A activities.
Mm-hmm. Always, as a retail investor, that's always a huge part of my own investment due diligence, right? Is the history of management and their success, right? And obviously, so this is a decent segue. People hear the name Ross Beaty, obviously that means something, right? Do you mind just exploring or explaining, his involvement in the company on a day-to-day basis or on a philosophical level? I mean, where how much time or how much involvement does he have?
Go ahead, Scott. I'll let you kind of head this one up, and I'll come in behind you on it.
Yeah, sure. So, he's 20% of the equity right now in Luminex. Obviously, he's very supportive across the companies. Back in May, June, for example, when we saw the market pull back there, he put up a personal line of credit to fund Lumina because we didn't want to raise equity at those share prices. So he's, I'd say he's active at most board meetings, if not all board meetings. Certainly in the loop on all strategy for the company, anything that's going on. So he's quite active and has been since Marshall joined the group in 2003. These are his development companies, so obviously it's a bit of a different strategy than Equinox Gold or Pan American Silver, but it is something he's actively still involved in.
Yeah, perfect. And again, I can't, again, part of my due diligence, that team, having a strong team makes such a difference, right? I'll follow the right team most anywhere on the globe, right? So let's just switch gears here though and talk more nuts and bolts, just share structure, right? Can we just verbalize, maybe this is one for you, Scott, but can you talk us through who owns what, how much does management own, institutional, high net worth, retail?
Sure. Yeah, so right now we're about 132 million shares outstanding. We had about 12 million warrants out from the last financing. They're about 55 cent strike. For reference, we're trading about 31 cents today. So about a $40 million Canadian market cap. Like I said, Ross owns about 20% of the company. Management holds about 5%. We have a group of Ecuadorian investors, about 5 gentlemen that own 14% of the company. And then the largest institutional fund is Route 1 out of San Francisco. They hold about 11% of the company. And then there's kind of 10% of the rest of it is held by other funds. So, in aggregate, we kind of know where about 60%, 70% of the stock sits, and then the rest would be a retail float.
Okay. And then Scott and Marshall, one for both of you here, just what's your average cost basis, if you don't mind sharing?
When we spun it out, I think I was the first trade at 90 cents. But no, I think most of the financings, over the piece have been done between, 60 and 70 cents, with the exception of the last financing at 38 cents. So, management always participates in the financings and takes a big percentage of them. So, it's I don't know what the exact number is, but I would guess our cost base is probably around 50 cents these days. Since it's been spun out.
Yeah, you might talk about the spin out and the share ratio also when we did that.
Yeah, fair enough. So if you were in it before September 2018, you would have got 0.15 shares in Luminex had you had a share of Lumina at the time. So that's how we would have our initial base of shares from that. But then obviously there's been numerous financings since then.
This is a theme that it's not particularly pertaining to you individuals specifically, but, I think a lot of times retail complains that, we're always late to the party, right? That here we are at 50 cents and management's in at 10 or 20 cents. And this is one of those moments in the market where, you can get in, and so many of these companies that I talk to, you can get in at prices comparable or even better than insiders, right? So, I think people are always afraid, but when buy when there's blood in the streets, especially when it's your own, right? And yeah, this is an opportunity for people to actually have very, very competitive average cost basis. Absolutely. Scott, I had a question for you regarding Overhang. It is impressive, right? You have 130 million shares out and only 12 million warrants. Is this just so obviously you've been fairly successfully at raising capital without it being too expensive for you guys, right? I mean, are you successful? Previous financings, half warrants, no warrants, full warrants that just expire after a couple of years, or how do you structure your financings?
Let me start on this one, because this goes back to the whole Lumina Group kind of philosophy. We basically never did warrants through all of Lumina Copper and the subsequent companies. And then we got into this last financing where it was the first time that we had warrants, related to a financing. So that's your segue, Scott.
Yeah, no, exactly. I mean, typically Ross, because he's such a cornerstone, helps us set the price and the terms. And, we do get a lot of complaints that we don't offer warrants. The market was obviously in a rougher place last year. So that was the first time that we offered it. And, I think there was a lot of people who wanted to come in that were, optimistic about where it goes with the drilling we were onto, as well as some of the partnerships we have in the background. When Anglo was going to start drilling, they'd taken a little longer than we wanted to. So, it was a way to get some reward to shareholders who'd been patient as well, not just the market conditions. But yeah, it's not usual for us.
Mm-hmm. I mean, it's always nice being able to finance without warrants. Always a nice touch. Obviously, yeah, it's kind of a testament to your team and your family of companies, right? So, no, always nice to see a nice clean share structure, not too much downward pressure if you start to run here. So switching gears here, kind of on the same topic here, just about kind of corporate financings. What's your cash on hand at the moment?
Yeah, so at the end of September, we were about $4 million US. We continued to drill through Q4 and we're continuing to drill now. So, we'll come back to the market in the first half of the year for sure. We want to keep drilling. The results we've been putting out from Camp and Los Cuyes have been pretty amazing. And frankly, actually some of the best intercepts we've had ever on the property. So we want to keep chasing it.
Mm-hmm. And that's something I wanted to mention too, is, you folks you plunk down 10 or $15 million every year into the ground or so. And so this is not a little small cap $40 million company that only does a couple $1 million in exploration every year. There's a sizable annual exploration program going on, right? So when you are exploring, what's your burn rate, monthly burn rate?
Yeah, so the drilling costs for reference right now for us in Ecuador are about $250 US a meter. Our holding costs for the properties in Camp would probably be in the neighborhood of $4 million a year. We do spread that out a little bit. The Camp we use obviously for some of the partnerships, and we use it to run exploration throughout the country on kind of all our properties, with the exception of the Anglo partnership. So, the Camp plays a critical role in supporting exploration on all the properties, not just Condor. But that's kind of the general G&A. Last year we would have drilled in the neighborhood of just over 10,000 meters. Since we picked the property up in 2016, probably closing in on about 45,000 meters of drilling at Condor since then.
Mm-hmm. And I will get to that. I'm going to ask you to break that down for us here in a moment. I just wanted to ask one more here just to close out this section. You've referenced this with Ross's personal line of credit for you, but how is your strategy? Obviously the market conditions for metals has been, shall we say, abysmal for a while here. Has this impacted your strategy, your exploration strategy, your corporate strategy? How has it impacted it? How has your strategy evolved to match these market conditions rather?
Yeah, so maybe I'll start, Marshall, you can fill in. I think our two most obvious responses to what you're talking about would be one, which we kind of already had out of the gate, is looking to partner on these other land packages. I mean, obviously over the years we brought in, First Quantum, we've brought in DHP, Anglo, and Jogmec, and have had over $40 million of non-dilutive capital come into the company for exploration and payments during that time. So that was one way to mitigate. So we're not going to raise all that capital ourselves to progress these projects in Ecuador. The second thing, obviously we put out a PEA in 2021, and that was really to look at, the 3 million ounces we had at Condor North there. But it had, a reasonable amount of capital with it, $600 million of capital to build the project. And in this type of market, people want smaller, more buildable projects. So as a result, we've gone back and we've chased the higher grade underground areas more to try to rescope the project and bring up a smaller capital project. And I think, the drilling we've done so far has been very successful at that. So that's kind of the second, I'd say, response to the market conditions. Interesting.
So now I'm going to be jumping around here a bit, but so this is a question I had for you later on here. Obviously, yeah, I think I mentioned this off the start. You have a strong, like you say, strong NPV, good ounces, lots of inferred potential. NPV is nice. NPV to Capex ratio is a little more middling, and then your IRR needs work, right? So like you say, it's a large Capex, long-term project. There's a lot of meat on the bone, right? Like you're not scraping the bottom of the barrel here for prospectivity. But I guess how much are you, and you kind of reference this, Scott, so this is why I ask this now, is how much have you changed are you almost going to have to put out a new PEA? Or how much has your exploration or development strategy changed with the market prices, market conditions?
Yeah, I think the real change that happened is the discovery of Cuyes West, and then going back into the camp zone where we still had areas open. And these are both underground targets. So we have a press release that is coming out tomorrow that basically has some camp zone results, and we can talk a little bit about that more here. We're after the market at this point. The Cuyes West zone really changed things, where we've got sort of 5 to 10 meter widths, true widths basically, and 5, 6 grams, 7 gram and higher sort of intercepts. So that's changed kind of the focus of the project here. And basically what we're looking at now is In the 25,000 ton per day scenario in the PEA, about 2.5 thousand tons per day were underground at the camp zone. There are about 600,000 ounces of gold in that. And now we're looking at kind of a similar type zone, developing that at Cuyas. And if we can do that, get sort of between 1 million, 1.5 million ounces of gold, higher grade, underground, near surface, camp zones right at the surface, looks like Cuyas is as well. Then we'll look at, can you do a 4,000, 5,000 ton per day CIL plant there, have a lower initial capital, have higher grades in the early years, and then look at later in the mine life, bringing in some of these open pit targets. So basically what we've done is we've refocused that. We're likely to go finish up the drilling campaign. We have a drill program planned for 2023 where we go back and then continue to drill down dip and along strike in the Cuyas West zone, go back into some open areas in the camp zone and drill those. And then we'll probably get to the point where, depending on the results, if it looks favorable, we'll go put out a new resource estimate. We'll rescope a PEA on the underground targets initially. In the old PEA that we put out, we were starting underground and 2 open pit targets simultaneously. This way we'll be able to reduce capital, and we think we're headed there. So the focus of the exploration work next year is on that approach, basically. And that's camp in Cuyas West primarily.
And that's exciting.
Go ahead. Sorry.
No, go for it, Marshall. You're the one to talk here, not me.
The other area too, we've had a hell of a time getting into this area, is up in Prometador, very steep country, but we have a kilometer-long surface anomaly. It's an open pit target, and it also looks like it may have some underground potential as well. And we're working to get into that area right now. We're getting pretty close. We've got a lot of the infrastructure in place and hope to be drilling that next month. So, that's another area that we're looking at with the exploration dollars for next year.
Excellent. And so, you're touching on a lot of things I want to touch on here. I'm just trying to keep my jumbled thoughts organized here. The one question I have, because to clarify, for those of you who aren't familiar with Luminex, Cuyas West is not a part of this PEA. It's not a part of the resource estimate, right? So again, so when I'm talking about, again, as an investor, I'm not here to buy things at fair value. I'm trying to find reasons. I'm trying to find discounts and companies with problems that are solvable, right? Companies where, the solution maybe hasn't been fully caught onto by the market yet. And so this is where Luminex fits that for me, where you have, like we've talked about, very prospective resource, lots of ounces in the ground, high Capex costs, but you also have pretty clear paths to lowering Capex and increasing the NPV through Cuyas West and through these other deposits that haven't even been included in a resource yet, right? So I guess the question I have for you is, updated resource 2023 at some point, how many meters of drilling how many meters of drilling are going to go into that haven't been counted yet? And if I could ask you to, knowing this is a forward-looking statement through and through, do you have a target for ounces to add, if you don't mind, if that's something you can feel comfortable sharing?
Yeah, so as far as the ounces goes in the forward-looking statement, I mentioned the 600,000 ounces that we had at the camp zone. Hopefully we can get that up to maybe 800,000 ounces and bring in, maybe 400,000 to 600,000 at Cuyas. And that kind of fits within the 1 million to 1.5 million ounce sort of number that I threw out earlier. So that's kind of the target there. We're working on a drill plan right now to understand how many meters we need to drill to get Cuyas West into indicated category. We're drilling inferred. Sorry. Thank you, Scott. We're drilling it basically on 75 meter centers right now. So we're in the process of coming up with those numbers. So, I think a firm number right now is a little bit premature, but we're sort of looking at maybe 6,000 to 12,000 meter kind of range is what we're looking at.
Yeah, decent. And so maybe let's just run through the resource estimate here. And again, I'll have visuals up because it can get a little bit of confusing to have a bunch of numbers on the run here. But so right now in your PEA, it was 2.7 million ounces M&I gold equivalent, the silver quick kicker, and then 4.3 million inferred. So a total of just south of 7 million gold equivalent ounces. of which this is what I found interesting about your company, right? This is one that I didn't do a lot of research on until maybe the last couple of months, but a lot of it is at Santa Barbara, which wasn't even really the focus of this past drilling campaign, right? Do you mind just kind of running through, again, assume that there's going to be a map here for us, but do you mind running through the Santa Barbara versus that North Condor and why maybe you set aside Santa Barbara for the time being to explore these other deposits?
Scott, you want to take a shot at this?
Yeah, sure. So, I mean, they're two slightly different types of mineralization. Santa Barbara would be a classic porphyry system, and it's got both gold and copper in the mix. Condor North would be a intermediate sulfidation system. So, a key part of if Santa Barbara got developed eventually would be recovering the copper. And this is not too dissimilar from what we see at our Cangrejos deposit in Lumina Gold. So we're pretty familiar with that style of deposit. It is lower grade gold. It's quite large, as you point out. We looked at, trucking it to a plant in the north. We looked at what would happen if you didn't have the copper in there. It just didn't really make a lot of sense at that point. So that's really why we focused on a simpler CIL circuit with the mineralization in the north. I think in the future, there's certainly areas around El Hito North, where we've actually done a little bit of drilling on the copper side that might warrant a flotation plant and a plant in the central area there around the porphyry area. But that just wasn't where we thought we were going to get the most bang for our buck in the near term. So that's why we focused on Condor North.
The other thing that happened there too is after we were doing the work at Santa Barbara, we made the discovery at the camp zone. Camp zone, before we did the work there, was totally unknown deposit. It sat right underneath our camp, or it sits right underneath our camp there. So, we focused on that. We got a lot high grade mineralization out of it that kind of changed the scope of our view on the project. And, that's kind of another big reason why we ended up that direction.
So Santa Barbara, even though it has a fairly healthy resource, just because of complexities in terms of actual production or development, is kind of just on the back burner for now. That's just kind of in the back pocket for future Luminexes. Yeah, okay.
Yeah, and it's had a lot of drilling. I mean, if you look on the resource estimate sheet, there's a fair amount of indicated there as well.
Mm-hmm. Mm-hmm. And that's actually a question I had about your Condor North. Prior to Luminex, how much historical drilling has there been on it?
Do you know off the top of your head, Scott, was there?
Yeah, I'd have to go look at a breakout, but
yeah,
there's
deck, and I think it was about 100,000 meters.
Okay.
Yeah, but that would be between Santa Barbara and Condor North. A lot of the drilling at Soledad and Cuyes, has brought some indicated in there. So the pits were quite thoroughly drilled. Camp, we've drilled just over 25,000 meters, and then Cuyes West was new last year. So, but it's all in our technical report there on the website that kind of breaks it out by area. Sorry, I don't have that on the top of my head.
No reason. I've got that here somewhere too, just for the sake of conversation here. Just one last question here around the land package. Are there any royalties or remaining payments or obligations on it?
No. So you would just have the typical royalty to the government, which every deposit would have in Ecuador, and that's a range that gets negotiated when you go to do your investment protection agreement. So Lundin Gold, just north of us, pays 5%. Since then, they've lowered the royalty range to as low as 3%. So we'll see, we're further along in Lumina Gold and closer to an IPA. We're fairly confident based on discussions with the government, we could get a 3% royalty there. But we'll see what happens at Condor down the road. We own this asset 98.7%. It's kind of an interesting point. We picked up an extra 8.7% just by diluting the other owner out that didn't contribute capital. And, the market didn't really react to that, even though it was basically adding, 9% ownership for free to the asset. So, that's something we got done last year.
So maybe just to finish off exploration here, I'm going to ask you to recap 2022. You've already kind of touched on it here, but we'll kind of clean it up. How many meters, where did they go? and then maybe any assays that are outstanding. And then maybe after that, do you mind? And again, I know that, Marshall, you said that it's still up in the air a bit. Your 2023 plans are still flexible or still fluid, but can you at least give us a general direction? But yeah, 2022 first and then 2023.
All right, Scott, go ahead.
Yeah, sure. So, in 2022, from our perspective, almost all the focus was really around camp drilling in Cuyes West. As far as holes released, I think we've released up to hole 9 at Cuyes West. We've got, I think, out to hole 14 at the lab now. So we should have some more results out from that deposit in January. Camp, as Marshall mentioned, we'll have a release out tomorrow with kind of the remaining camp holes that we had drilled in some new areas that we think we'll be able to expand the resource on. And there's a good figure in that press release that kind of shows you where those drill holes have come outside of the block model and where we think we've expanded it or improved the existing block model. We worked hand in hand with IMC, our mine planners, to design that drill program to enhance it. So last year was, a little bit north of 10,000 meters. We'd like to do probably something in that zone in 2023. And, we think we've got certainly more than enough targets to justify and warrant that level of drilling. And then, Matt, I know we spent most of the time talking about Condor, but I do think it's important to mention as part of the 2023 plan here, and you might have been going this way anyway, but, we're going to have Anglo Americans starting to drill on our Pegasus property really soon, and that's a copper porphyry target. I know people who've been invested for a long time have been very patient waiting for them to drill, but I think we're finally on the cusp of that. And, they were out of the field for all of COVID, but getting pretty close. They're going to start out with a 3,200 meter drill program there. And, if they hit a large scale copper porphyry, obviously that has the potential to change the story as well.
Yeah, and on that Anglo property at Pegasus, the Medusa target that they're looking at initially does have some limited drilling information historically, and plus our geologists did a fair amount of work there. So we know there's definitely a porphyry copper system there. The geophysics that was done subsequently, and you can see a couple figures in our deck, that shows a real classic porphyry copper signature. So pretty excited to see them get out there and drill that. I think we're hoping for some good results.
Mm-hmm. Just the nature of the beast with these interviews is it kind of can't help but focus on the flagship. And that's not to say, Luminex particularly seems like you have quite a decent little suite of projects on the go here. Just a follow-up question about Pegasus. Pegasus A and B, is that what they're Pegasus A, B. How deep is your target? How deep are we going here for this porphyry?
So I think, Scott, they're looking at 6 holes with that initial program, right?
Yeah, I think it was actually 5 over the 3,200 meters. So kind of 6 to 700 meters is rough targeting for the holes.
And how much of that is cover?
It's there's outcrops near the surface. So, where the saprolite begins and ends and where you get into, good solid rock. I'm not sure off the top of my head, but it's fairly near surface target. It looks like there's a pyrite halo developed. So once you get through that, you're down into the primary porphyry.
Mm-hmm. No, that's exciting. Question here, just to finish off maybe the drilling discussion. Where do your assays go in Ecuador, and what's the turnaround time? I know when I talk to Canadian companies, it's still 2-3 months waiting for assays, which just kills any momentum as an explorer or even in the market, right? So how are you finding things in Ecuador?
It's pretty much, we're using ALS, and it's pretty much 4 to 8 weeks kind of time frame in average, I would say. It's gotten a little bit better lately, a little bit quicker.
Yeah, you are finding improvements?
Yeah.
No, I think it was Puma Resources. I don't think he'll get mad at me for naming him, but he was expressing frustration. I think it was 3-month turnaround, which I don't know, how do you even begin to organize a drilling season or a drilling campaign with 3-month turnaround, right? Yeah. Anyway,
we got into that a little bit when we first started to drill Cuyes, and the initial idea was put a few holes in, get the assay results back, and kind of see what it looked like. But the visuals turned out so good. that we continued to drill on blindly without some of the assays, and fortunately it worked out for us. But yeah, you don't want to get too far ahead of yourself with a new target without that assay information.
Yeah, absolutely. So switching gears here, I want to talk about jurisdiction and ESG, just because obviously anybody who follows geopolitics or Central American politics knows that Ecuador has been in the news in recent months, right? So obviously This is going to be a fairly large portion of anybody's due diligence on Luminex. So I guess, just general overview. I don't want to get super detailed in this because it's some months old at this point, but I guess kind of a two-pronged question. Can you tell us maybe just, maybe this is the elevator pitch on the Ecuadorian protests, but, what's their origin? Why did they start? And then part two is, the resolution. Where is it now? How resolved is it? How ongoing is it?
Well, what you got to realize a couple things. When you talk about the protests, this was the CONAIE, primarily one of the larger indigenous groups in the country. And before I get too deep in the CONAIE, you got to also look at the indigenous population in the country. And, in the region that we operate with the Condor Project, there are indigenous communities there. One thing you have to remember, these aren't monolithic groups. There's subgroups, and a lot of it comes down locally. And if you look at, let me put the protests aside for a second, but if you look at two of the most successful mines that have been built, Mirador and Fruta del Norte, they're in indigenous areas. So, you can work with these communities, you can get the local support, you can work with the government to permit these projects. And, both those projects, Fruta initially was sub $1 billion, and then Mirador was plus $1 billion initial capital. And you were able to get international financing on both projects. Well, the Chinese primarily financed Mirador, but on Fruta, you were able to get syndicated international financing. So with in areas where you did have the indigenous community. So a lot of it comes down to local, how you deal locally with the communities. But if you step back to the broader sense of what the demonstrations were about, it wasn't focused on mining. Mining was just one part of the indigenous demands. A lot of it had to do with high inflation. And in Ecuador, the inflation rate is quite a bit less than it's been in the U.S. It's been around 3 to 4%. So it was impacting, the poorer communities in the country, the rising fuel prices, that in turn rise prices for transportation, buses, that sort of thing. So basically, you also have to realize that these groups are politically motivated and trying. If you go back to the last election, Yaku Perez, who was an indigenous leader, almost made it into the final round of the election. So there's a political component to it. There's a practical component where the local communities that are poor are impacted the most by inflation and COVID and that sort of thing. And basically, CONAIE took to the street, organized several groups, and, they occupied, I think it was about, 16, 18 days roughly. Does that sound right, Scott? They had blockades. Interesting thing is we were able to operate all the way through that time. And at Condor, we came close to, a week's supply of fuel, but we got through it no problem. So, that was what happened. And in the end, they agreed to a dialogue table with President Lasso. And, the biggest issue on indigenous lands is Ecuador was a signature to ILO 169. And, basically Ecuador agreed to that, but they didn't put implementing regulations in place. So a lot of the indigenous groups look at it that they want consultation and consent, and they believe that means they have the ability to say no to a mine or any other industrial project in the country. Whereas the framework the government's working on right now, and this came out of the dialogue table, they committed to coming up with the regulations on how ILO 169 would be implemented, how consultation and that sort of thing would happen. So that, as far as it affects mining, that was one of the biggest things. They also didn't want mining on, sacred kind of lands, patrimonial type lands. They didn't want it in protected areas and hydric zones that are designated. All these things exist in the country already, but they had a view of expanding some of those areas. So that's kind of the background that's still out there. And basically, we'll see where everything goes. But right now it's calm. They've come out and feeling that they haven't totally had all their demands met by the government. But right now everybody's operating in the country. So it's one of these situations that's day by day, week by week, month by month kind of thing, right?
President, no, Scott, you want to jump in there?
Yeah, it might be where you were about to ask, actually, but I was going to say, I also think, outside of that, what's interesting is the support from the federal government has increased dramatically since we entered the country, in 2014, and really, the desire to bring in international investment, promote responsible industrial scale mining versus, some of the illegal mining that might have been going on in the country, and really delineate between the two. These are things that are driving the sector forward, and we do see that support from the government, which is huge, right?
Yeah, and that was where I was going. Is that Lasso at Ecuador he's obviously very clearly pro-mining, right? So that Ecuador has hitched its wagons to resource extraction and exploitation for the good of its people, right? So, it's one of those things where, newer jurisdiction and there's going to be growing pains. And I guess that's 21st century exploration, like it or not, is that Indigenous peoples, is duty to consult, I suppose, right? So I guess off that as a branch, right? Now I apologize here, my mispronunciation. Is it the Shuar people?
Yeah.
And so they're in your region, but if I'm not incorrect, your Condor itself is not on any Indigenous land?
No, we do have Indigenous land that we access. We own some of the surface ourselves. We have Shuar communities that we're working with. We have employees that are out of those communities. We have programs in and around the communities. And, overall, we have a positive working relationship with the Shuar in that area.
Because and then you can anticipate where I'm going here with this. What is your on the ground consultation, your on the ground community efforts? I know the Shuar, if you Google them, comes up that they are opposing a copper mine that's being under development right now because they figured they weren't consulted, right? So they are flexing their muscles or trying to swing their weight around a bit here. And so I guess what are you doing in a proactive sense to ensure you have good relations with these people?
Yeah, I think the biggest thing, and again, this goes back to the local level, like we were talking about earlier, is understanding the needs of the communities. Listen, the companies that are in operating, ours in particular, we're not out to be Santa Claus and do that sort of thing, but we do need to know what the needs are and how we can cooperate and help the locals. We, for instance, we move drill rigs around all through the area, and it's all man-portable rigs. So we have a need for labor. We have a need for buying fruits and vegetables and goods in the local community. We have a sort of an obligation to help with things like education, health, environmental practices. So those are kind of the cornerstones of a lot of the social work that we do within these communities. And I think at the end of the day, if you look at most of the communities around the mining areas, particularly in poor areas in the developing world, at the end of the day, people want to have jobs. They want to have opportunity, for their family, no different than you or me want a better future for their families. So that's kind of at the core of it. And I think you really have to listen and respect, what their values are, how they look at things, and what their needs are. And work with them the best you can in mutual interest. And, that's kind of how we've approached things. And, our group has worked with Indigenous communities in a lot of different countries. And, I think Ecuador has been pretty good in the context of the Condor Project. But you have to devote a lot of time to it. We have a lot of people working on it day to day. We use outside consultants to help us do the right things. So I spend a fair amount of my time with it as well as government relations and trying to bridge both of those. So, I hope that answers your question.
No, it absolutely does. It provides some understanding, because again, I circle back to a point I made previously, is that part of my own due diligence, again, if a company, if everything's perfect, there's no reason for me to invest because I'm not going to see any price appreciation. It's finding those projects, finding those companies where there's a fly in the ointment, or there is a perceived, fly in the ointment, perceived issue, perceived flaw that when you actually dig into it, actually is surmountable, right? And so I talk about the prospectivity for Luminex being one thing that draws me to it, is that you have this valuation that maybe some people are iffy on, but there's a path forward there. Same thing with the Ecuadorian geopolitical situation, right? It's in the news for the wrong reasons lately. People are scared, right? There's a lot of kind of bad press, bad news. But if you actually drill down, it looks like it's not going to be a permanently disruptive or game-changing sort of thing, right? That Lasso remains pro-mining, that these local communities, they are not opposed vehemently to mining. They just want it done within, they want to exercise some control, right? So my point is, again, for people listening, is that, these solvable issues are where you create value for yourself, right? So thank you for that, Marshall and Scott. Let's switch gears here. Oh, continue.
I was going to add one last thing. I mean, obviously, everybody operating in Ecuador, there's, a political risk discount to the country. And, I met with Lasso last year, and we talked about this. And he said, give me some time, because we're looking at multiples of PNAV for Western developers. And we were talking in the context of Congrejos. But he said, give me time and you'll see that the discount that you see for Ecuadorian developers and explorers will move up closer to their Western peers. And he came out of banking, and it was pretty interesting that he had a view on that. So, time will tell there. And then I think there is also with the, the demonstrations that were happening. If you go back and look at, mining companies and other publicly traded companies in Ecuador, after that happened, share prices took a hit because that was more geopolitical risk, primarily coming from the indigenous communities' blockades. So, and most of that was away from our general area that we operate, but it still affected us, right? And it affected pretty much everybody operating in the country. So, Scott, I don't know your feelings about that, talking to investors, but you might add anything if you've got anything further there.
No, I mean, it's a relative game. And obviously, I think, we've seen consistent improvement for a decade now, and we've seen some of our neighboring countries going the other way and just becoming more difficult for not only mine construction, but also just drilling and simple permits. So, I think in an environment that's competitive for capital over the longer term, that's going to help Ecuador.
If I may now, I'll transition here to our final kind of major topic here, and just around valuation, right? I love a good PEA. I love a good 43-101 resource. Can really get into it. So I will have these images up for my listeners, for my viewers. But I want to talk about, and maybe this is just more of conversation, less of a question and answer, because we've already kind of covered it here. But just for the sake of this interview, right? Base case. And I appreciate it's. I want to ask you how you get to your base case. I'm always interested in the math behind it. But $1,600 US gold, 16% IRR, and an after-tax NPV at 5% of $387 million. Obviously, these days we're closer to, I think we're at 1870 gold now or something, right? So if I go to the table 22.6 in your 43-101 or in your PEA, 1760 gold gets to the 20% IRR. 562 NPV. I don't need to read these out too much, but the point is that there is torque, obviously, and you're on the right side of the gold price here, right? I mean, at these prices, you're approaching 23%. This is just my napkin math in my head here, but 23% IRR, which starts to become more respectable, right? Because this is kind of the fly in the ointment, as I said earlier, is this the high Capex intensive. And like Scott, you referred to it, right? People are looking for low Capex projects in this market, right? So I guess, and I know you said this, but just for the sake of having this being this section in this interview, could you one more time just run through immediate goals to improve the economics of Condor North? so that we understand. I mean, you've got Los Cuyos, right? You've got you're doing underground versus open pit. What are you doing to get these economics, close to that 25 to 30% IRR range where people are happier with it, right?
Yeah, I mean, we kind of danced around some of the specifics, but maybe I'll step back for people because we didn't actually go through it. I mean, the underground currently in the PEA that exists was about 10% of the mine feed, so about 2,500 tons per day. We scoped a pretty large project here at 25,000 tons per day to bring in the open pits. And, that was, call it 190,000 ounces a year of production for 12 years. And in the early 5 years, well over 200,000, about call it 220,000 ounces a year of production. So the project has scale. You're bringing in the 3 million ounces of resources in that northern area. The operating costs are actually pretty attractive. At $840 ASIC, you've got cheap hydropower in Ecuador. You've got, subsidized diesel. The strip ratio on the pits was below 2-to-1. The metallurgy and recoveries was very good. So all that helps. But because we had to go fairly large out of the gate at 25,000 tons per day, there is this $600 million of capital. So, when Marshall talked about wanting to have 1 million to 1.5 million ounces between Camp and Cuyos West, it's not just ounces, it's also, where can you draw tonnage from? So, our goal is to have something similar to Camp where you could draw, 2,000, 2,500 tons per day to kind of feed between Camp and Cuyos, maybe 4,000 to 4,500 tons per day sort of facility that's doing the high grade to start. And then, if you want to bring in the pits later, that's all optionality, right? But to your point, there's a lot of gold here. It's well understood. There is a lot of torque at this project, not only at Condor North in the PEA area, but you've also got the 3.6 million ounces sitting at Santa Barbara, which only gets larger at higher gold prices because that's drilled off quite deep, actually. So there's a lot of optionality for some of your listeners here who believe in a higher gold price like we do.
And I have a question. So, yeah, you have a lot of inferred ounces, which aren't counted as such, right? Or aren't counted in the economics of it. But what's left to, if I look at your pit models, right, you have a lot of inferred ounces in the pit constrained resource, which is nice. What do you have left to do to upgrade those to M&I?
Well, so on the underground, which we're focusing on now, what's your view on the space? So we're drilling on 75 meter centers for inferred. You probably have to at least half that to get that up to indicated. So probably, somewhere in like 30 meter type spacing to get that up to indicated to use as a reserve in a PFS or a feasibility study. So that would, I don't have the exact number, but it would be probably pretty close to, doubling the drilling. Is that fair to say, Marshall, in your view?
That's probably about right in the ballpark. So
that would be on the underground portion. Now on the pits, there is some indicated already. It's more homogeneous. You can drill on wider spacing. So that wouldn't be as much incremental drilling as a percentage of what's already been done. But, you would want to get everything you wanted in your mine plan to at least indicate it to use in a PFS or feasibility as a reserve.
And then, so your 2023 drilling, is this mostly step out and mostly exploration drilling still, or what does it consist of?
So most of it is definitional drilling to understand the scale of the Cuyos West deposit. Right now we've identified about a 400 meter strike length, and we've drilled it probably down to about 250, 300 meters vertical. So we want to understand if there's more strike length we could add to it and then continue to drill it deeper. It's kind of interesting. As we go deeper, we've seen higher gold grades. But again, we're in the initial drilling phase. We only have somewhere on the order of 16 holes. We have a drilling right now. So the idea there is to get more confidence and understand the scale of Cuyos West, and then to go back into the camp zone into areas that we believe are open, that are decent grade and thickness, to add some more drilling there. And the other thing that we really haven't talked about, but we're starting to understand the structural regime quite a bit better. So we think that there's other Cuyos and camp zone type targets in the general area. So we'll do some initial work there. That doesn't add resources at this point, But so when we go into next year, it's really whether it's a 6,000, 12,000 meter program, it's going to be focused primarily on the Cuyas West, additional drilling at the camp zone, and then some drilling at Prometador, the open pit target that we talked about, and just trying to get the confidence of that up. And then if we see it's real solid there, then we can work towards updating a new PEA with a lower initial capital, smaller throughput, higher grade. One thing we didn't mention in the PEA that we have out right now, about 87,000 ounces a year come out of the underground at the camp zone. So if you can get two of those kind of near, and these are near surface, low development costs to get underground. If you can get two of those going at once, Cuyas West and the camp zone, and you get up to over 100,000 ounces from those deposits, and you have a lot lower initial capital, and you're looking at 4,000, 5,000, whatever the throughput tons per day for a CIL plant. It changes the whole story, and that's really where we're trying to get to this year.
Yeah, it starts to feed itself. Yeah, absolutely. Interesting. Always an interesting conversation around how to just how do you crack this nut, right? I guess just one final question here around cap. I mean, again, this is forward-looking statements, and it's probably difficult, if not impossible, to have anything close to an accurate number. But I mean, do you have a number in mind? Do you have a goal for Capex reduction? Right now, it's 658 US against an NPV around 600 million at current gold prices. Do you have a target or a goal or something that you'd be willing to kind of discuss?
So if you could do the 4,000 ton per day sort of scenario, and Cuyas pans out and the camp zone, you're sort of the mid 200s to upper 300s range is what you would be looking at for capital, and that's just, obviously there's a lot of work to do, and you would optimize it and all that, and you try to keep the capital as low as you could get it. But that's kind of my gut. I don't know, Scott, if you see it different.
No, sounds about right. I mean, Marshall's on the board of Equinox Gold, and obviously they've just gone through a fair amount of construction projects. So, he's got kind of a good view on current numbers and current capital for all these things.
Yeah, perfect. No, I appreciate that. Thanks, guys. One last question here, and I appreciate your time here. So I'll try to be sensitive to the fact we're kind of approaching the end here in terms of scheduling. Just 2023 catalysts, right? If you're going to, you got 2 minutes to tell people what to expect and what to be excited for, what would you say?
Yeah, so I think you're going to have, continued drill results out. I mean, obviously we've got outstanding holes from last year's program. We're continuing to drill right now, both from, camp and Cuyas West. And as Marshall said, we'll be getting into a brand new area, Prometador. So you're going to have drill results from 3 different areas of Condor North. I think you've got Anglo American starting drilling soon on the copper property. So that has potential to be very exciting. Obviously, different commodity, different scale, but a great partner that's spending a lot of their own money and isn't costing our shareholders anything. And, I think we're going to continue to work the land package here too. We had BHP give us back a property called Tarky in the middle of last year. But, we're seeing interest on some of that and some of our other copper properties. So, I think there's the potential for more partnerships there. I think those are the main catalysts that we see, and, really just continuing to de-risk this project and make it something that works in, this gold price environment or even a lower one.
Thank you, Scott. And yeah, we are kind of at the end here. So final thoughts, parting thoughts, final words to you two gentlemen.
Yeah, take a look at us. Every CEO in the world is going to tell you they're undervalued, but I think we're seriously undervalued. And you kind of keyed on that, Matthew, when you're asking about our cost basis for ourselves investing. And basically, I think if you're interested in the space and particularly the asset that we have, now is a good time to get serious about it.
Mm-hmm. No, perfect. Well, yeah. And so, yeah, thank you, gentlemen. Marshall and Scott, thank you for your time. Thanks for listening if you tuned in. If you want to know more information, head over to Luminex Resources. That's Luminex resources.com. Very strong website, lots of good information there. And otherwise, for me, you can find me under the name Junior Resource Investing on Spotify, YouTube, and elsewhere. Marshall and Scott, thank you for your time today. I appreciate it.
Thanks, Matthew.
Thanks, Matt.
Thanks, guys.